go straight to natural gas, and we'll come back and circle back to some of the other things. Here's natural gas on Friday. All I want to say is that this level has actually still held this very key support level that we tried to defeat on Friday, held above it so many times on the 15-minute chart. You'll see these constant spikes down and pushes back up, and eventually we managed to get going a little bit and then collapsed back down on Friday. This is the 4-hour chart, and then bounced up sharply above this pattern. This pattern that you see here is a broadening pattern. It's a regular broadening pattern. It's a reversal pattern. It's taking place at the bottom of a long-term downtrend, on the short-term charts rather, that is, I should say. But on the day chart, let's actually use the same chart. On the day chart, there's a sort of medium swing down, nothing dramatic, back down to the dollar store level, the $2 level, just below. Big bounce off that broadening pattern. We've got to get back through these moving averages. This is the day chart, and this is the Pepperstone spot price. We'll have a look at the Henry Hub very briefly after this. We've got to get out of this broadening pattern, bearing in mind that if we move to the top of the broadening pattern, that will only take us to the top of this, the center of this previous channel, and just above or around this pink zone here at about 217. That will be our first target, 217 to 225. Call it a sort of a 10-cent range, 215 to 225. And if we can push up through there next week, going into the season where there should be a bit more demand on natural gas, both storage and supply and demand, etc., all of those things, well, the two things really, are showing a propensity to swing to the long side. So I'm still pretty optimistic on this. On the 4-hour chart, it looks good. On the day chart, it looks good. I'm still waiting to add another long position to this. And I was hoping, let's go back to the day chart, that we'd get all the way down into, sort of down into this messy, choppy zone here at around 170, 1.7, $1.70, somewhere around there. But we didn't get there. Now let's go have a look at the Henry Hub day chart. And that's this chart at the top right here. And basically, it's showing the same thing. The futures price is very similar to the spot price over at Pepperstone now. We're trading at 196.30 on the futures. That's the front month futures, and we're trading at 198, 198.30. So just a tiny little bit higher on the spot price. So the futures seem to have they're trying to make a bottom here. The spot price is trying to make a bottom, and it all looks good. If we do get a move down into this order block, into this support zone here, this messy, choppy zone, that's actually the place I'd really like to buy more natural gas than currently where we are at the moment. I'm not 100% convinced that this support is going to hold. And in fact, personally, I prefer it not to hold, so we could pick up a little bit more later on down in slightly lower levels into the 17s, 18s. However, I do know there are a lot of people who are relying on the price to move up next week and hopefully gap up this weekend and move them out of trouble. I'm very aware that there are quite a lot of traders who have over-leveraged and over-committed at higher prices and are struggling to hold onto those positions and onto those trades, and some even onto their accounts at this level. And so I'm going to wish, along with you, that this will move up and forego my additional add position a little bit lower down. If we move up, I'll be just as happy due to that and because of that. Now, a couple of other things on this chart. We're short on WTI oil, similar to Brent crude, moving in the same way. What's interesting is Brent crude peaked through or dipped. Let's have a look at Brent crude.